Howdy, everybody. Welcome to Liberty Call. I am Raymond Dahlman, your humble host here. It is Monday, June 12th, 2023. Hope everybody had a fantastical weekend out there in the interwebs. It is another rainy day here in Colorado. We had a massive storm come through here, I guess a couple hours ago, and there's still hail everywhere. It looked like it had snowed again, but most of it's melted off at this point. But sorry, I'm a little bit late today. I had a 1 o'clock, a 2 o'clock, and a 3 o'clock. So, oops, beard's all disheveled. So that's why I'm running a little bit late. So let's go ahead and jump into the numbers for the day and see how they turned out. Hang on. I forgot. If it's your first time watching Liberty Call, please give some thumbs up, likes, shares, subscribes, follows, all that good stuff. Now we can jump into the numbers. Gosh, got ahead of myself. All right, the Dow Jones was up 0.56% today, 189 points, closed at 34,066. S&P 500 was up 0.93%, closed at 4338. NASDAQ was up 1.53%, closed at 13,461. The VIX was flat today, currently holding at 1501. Canada was up 0.15%, Brazil was up 0.27%, and Mexico down 0.43% for the day. In Europe, Germany was up 0.93%. The UK was up 0.11%. France was up 0.52%. The Netherlands was up 0.13%. Spain up 0.37%. Italy up 0.91%. Switzerland up 0.49%. And Portugal up 0.3%. Russian exchanges both read today. Let's see here. It says 9.6. So they have not been open since the last time we talked. Let's go ahead and skip down to Asia. In Japan, the Nikkei was up 0.52%. Let's see here. New Zealand was down 0.56%. In China, the Shanghai was flat, down 0.08%. The Shenzhen Component up 0.74%. China A50 up 0.45%. DJ Shanghai flat, up 0.01%. Hang Seng up 0.07%. And the Taiwan weighted up 0.41% for the day. All right, let's go ahead and jump over to the weekly economic update. Late week rally sent stocks into positive territory, with the S&P 500 index closing just shy of the 4,300 mark. The Dow Jones Industrial Average last week gained 0.34%. The S&P 500 was up 0.39%. NASDAQ was up 0.14%, so pretty flat for most of the major indexes. And overseas rose 0.44%. Stocks edge higher. Stocks bumped along the flat line for much of the week ahead of this week's two inflation reports and the June meeting of the FOMC, the Federal Open Market Committee. Amid little news, stocks drifted lower to start the week until Wednesday, when a solid early day rally evaporated on news of Bank of Canada's surprise interest rate hike. Stocks rose again the following day, holding onto their gains, with the S&P 500 hitting a new closing high for 2023. Stocks added small gains on Friday after weathering some midday weakness, leaving major indices marginally higher for the week. Better breadth. One investor concern has been that a handful of mega cap stocks have driven recent market returns. Last week's market bucked the trend with outperformance in small cap stocks and equally weighted stock market indices. For instance, the Russell 2000, which measures the performance of 2,000 smaller cap companies, rose 1.9% for the week, outpacing the S&P 500 and the technology-heavy NASDAQ. Another example of the broadening performance was the outperformance of the equally weighted S&P 500 index, which each stock has equal weighting regardless of size, versus the market cap S&P 500 index, where the mega cap companies disproportionately impact index performance. Last week's return of the equally weighted S&P 500 index exceeded the cap-weighted S&P 500's return by 0.65%. All right, economic data this week. On Tuesday, we have the Consumer Price Index. Wednesday, we have the Producer Price Index and the Fed announcement. Thursday, we have retail sales, industrial production, and jobless claims. And Friday, consumer sentiment. Just two companies reporting earnings this week. On Monday today, we had Oracle, and Thursday, we have Adobe. All right. Well, that was everything in the weekly update. Let's go ahead and jump over to the market recap for today. Dow closes higher on strength in tech ahead of Fed meeting. The Dow Jones The Dow Jones had a strong start to the week as investors continue to show interest in the tech sector ahead of fresh inflation data and the Federal Reserve's two-day meeting. Tech giants Apple and Alphabet led the climb in big tech stocks, with investors piling in just days before the Fed's decision on interest rates, which is expected to remain unchanged. While inflation data due on Tuesday is not anticipated to alter the Fed's decision, it could influence the central bank to adopt a less hawkish stance if it confirms easy price pressures. If subsequent data in June and July indicate a significant decrease in inflation, there's a good chance that the current rate rising cycle will conclude, according to Eric Green, Chief Investment Officer at Penn Capital Management. Chip stocks, fueled by optimism surrounding artificial intelligence, also saw gains, with AMD rising 8% ahead of its investor day. The chipmaker is expected to provide updates on its data center and AI technology, solidifying its position as a competitor of NVIDIA in accelerator AI hardware market. Following the recent surge in stocks that pushed the S&P 500 into bull market territory, the Wall Street analysts are making bullish calls on stocks, predicting that the tech rally will extend to other sectors. Goldman Sachs, for example, increased its year-end forecast on the S&P 500 to 4,500 points from 4,000, expecting a broader valuation re-rating. Value stocks are also expected to become attractive again as the economy heads towards a soft landing. Okay, provided that the Federal Reserve maintains an appropriate approach. The economically sensitive companies, particularly those in consumer cyclical and with a value-oriented focus, are likely to benefit in this scenario. Typically, value stocks do good during recessions and down markets, so I'm not sure how they think the market's going to go up, but value stocks are going to be the choice to go with. Consumer stocks contributed to the broader market rally, driven by a surge in Carnival Corporation following an upgrade by JP Morgan, which cited signs of sustainable business strength. Additionally, Chinese electric vehicle maker NIO rose over 8% after announcing a price reduction on its vehicles and the discontinuation of free battery swaps for new buyers as part of an effort to strengthen its balance sheet. In deal news, NASDAQ fell nearly 12% after announcing its acquisition of Adenza for $10.5 billion. Meanwhile, Novartis AG revealed its agreement to acquire biotech firm Chinook Therapeutics for up to $3.5 billion, causing Chinook shares to rise nearly 60%. All right. That was the market recap. Got one more article here before I let you go for the day. It's titled, "It's Still About the Money," from Brian Westbury, Chief Economist at First Trust Financial. All right, let's see what he has to say. The Federal Reserve is set to announce its decision this week with a 30% chance of a quarter-point increase in short-term rates, according to the futures market. By the end of the next meeting in late July, there's an 85% chance of a quarter-point rate hike. While another rate hike is expected in late July, attention should be directed towards recent developments in the money supply. The M1 measure of money supply has declined for 13 consecutive months, while the broader M2 measure, which is closely followed, has dropped for 9 consecutive months and is down 4.6% compared to a year ago. The M2 measure does not include large time deposits, but the M3 measure, which is no longer produced by the Fed but tracked by international groups, reveals a 4.1% decline from its peak in July. Bank credit at commercial banks and commercial and industrial loans have also decreased, indicating a tighter stance by the Fed. These signs suggest that the Fed's policy is becoming tighter. The question is, how long will it take for this policy stance to bring down inflation, and whether the Fed will maintain a tight enough policy to keep inflation in check, even if it leads to a recession. Interestingly, the Fed claims that the money supply is irrelevant as a forecasting or policy tool. However, it allowed a surge in the money supply in 2020 and 2021, leading to inflation. Now that the Fed's is concerned about inflation, it appears to have reversed course and caused significant volatility in the money supply. That volatility in money growth has already had consequences, with some banks facing distress. It seems that the Fed may not be as sanguine about the role of money as it claims. The economy is currently caught between the economic growth and inflation resulting from the surge in the money supply from 20 to 21 and the negative effects of recent riptide in money supply in 22 and 23. Looking ahead, a recession is expected to occur as the impact of the money supply riptide increases. The disregard for an essential part of the economic theory is puzzling, and the consequences of such policies will inevitably have a cost. While interest rates may rise in June or July, there are greater concerns to be addressed. All right. So, like I've been telling clients this week in meetings, is that if the Fed sticks to their guns at these next few meetings, this week and next month, and continues to either hold rates or continue to raise rates, yes, we will probably go through some sort of a recession, bear market, downturn, whatever you want to call it. But this is healthy. It's part of the market cycle, and continuing to just postpone it like we did from 2020. This we're going through now what we should have gone through 3 years ago, but with all the inflation and money creation, all that did was just push it down further down the line. So anyways, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.